Okay, again, good morning, everybody. This is Mark Randall with GoldenCare USA. Welcome to today's session on Mutual Care Solutions. This is our new long-term care product that we brought up through Mutual Omaha. And I'll tell you what, I'm sure as you go through today's session, you'll see it's a great product and it's a fun product to sell out there. You know, when you look at today's market out there and you see what's happening out there, you know, there's a lot of players that have exited the industry. There's a lot of shakeup going on with the players that are in the industry today. And when you really look at today's marketplace, you need three things. Number one, you need a strong company. Strong financially, strong decision-making capabilities. Number two, you need strong benefits. You need benefits that are going to pay claims dollars when your clients need them. And third of all, you need strong flexibility. We're hearing a lot of talk today about price points, about where the customer is going to be able to afford to buy this coverage and when they're going to turn their back on it. So you need the flexibility to custom design a plan to meet affordability issues out there, and you need benefits that are flexible enough to handle the future, the changing market of long-term care. So let's take a look at how this product solves that. First of all, we think we got a strong company. You know, when you look at Mutual Omaha, you've got a company that's been around for 100 years out there. They're a mutual company out there. And you know what? That's an important thing today. As we watch some of the moves Genworth is making out there, some of the things that happen to the big companies like Hartford out there, you can truly see that you want a company that's focused on long-term results, not something that's dealing with the stock market on a quarterly basis. We're a household name. You know what? It's hard to find a baby boomer out there that doesn't remember Wild Kingdom. We all grew up with it. We grew up watching that show. We knew Marlon Perkins. We knew Jim. And you know what? That's a big thing. Plus, you got a company that's committed to long-term care. They've proven that. They're coming up through the ranks now. Right now, they're the third top company in the long-term care insurance industry. And you know what? That's significant out there. That shows how far we've come in a short period of time. So we got the strong company handled, and now we got the strong benefits. I got to tell you a little bit about the background of this product. You know, when we first approached Mutual Omaha back in 2005, the bottom line, Mutual Omaha had been in the industry for a long time, but they'd kind of been dabbling around out there, okay? And because of that, we had a company that wasn't really going out there and doing a lot in long-term care. But when we brought them our concept, we wanted to partner up with them, they looked at us and they said, here's the deal. We already got a career shop and brokers in the Mutual Omaha product out there. They're not real happy about bringing in an outside marketer. So they asked us if we'd mind writing through United Omaha. We were fine with that. United Omaha was a strong company. So we brought out the Cash First product with United Omaha. It didn't take long for Cash First to catch on. Once agents started seeing the concept of Cash First, how in a concept of taking Cash First, laying it against the reimbursement product, recognizing that in over 70% of the claims, Cash First was going to pay more claims dollars out to the clients, the concept caught on. Agents started selling it hard, and it became a lead product for a lot of the major long-term care agents nationwide. Then, when the new product line wanted to come out, Mutual came to us and said, you know what, there's no sense to us to have two product lines anymore, two companies in this market. Let's merge it all together into Mutual Omaha. So that's what we've done with this new product. We've got two products out there, and you can see the more traditional product that Mutual Omaha had before in the secure solution. The product policy limits based on benefit multipliers. It's the old 2-year, 3-year, 4-year, etc. It has 30% cash built in, and it's got some basic optional features. You can see our handwriting all over the custom solution. Custom solution, like our Cash First product, has a policy limit based on a pool of dollars. It's got 40% cash built in, and what it does is just has a lot of optional features available on it. There's more inflation protection options, more partner benefits out there, more return of premium. But I want you to know something. Custom Solution is not just for the top producers. It's a product that we built for every long-term care agent. And as I explain it today, you're going to see it's not that complicated a product. It's just that it's got more options built into it. So let's take a look at it. When we start out with the basic policy features out there, you can see in the Mutual Care Secure Solution, you've got the 2-year, 3-year, 4-year, or 5-year option. Now, when you move over to Custom Solution, we let you set the pool of money. You can go anywhere from $50,000 to $500,000 in $500 increments. So right off the bat, we're trying to give you the flexibility and the price pointing here. We're going to let you custom design this product right down to where you want it here. So you can go anywhere from $50,000 to $500,000. When we look at the monthly benefit, their actually Secure Solution is a little bit more flexible. Both products go from $1,500 to $10,000. It's just in the Secure Solution you can go in $1 increments, where in the Custom Solution we go with $50 increments. Okay, you know, not that much difference there when you think about it, because not often you're going to get down to switching it to $1. Elimination periods, again, you're going to see the flexibility of Custom Solution. The Secure Solution, you can go 90, 180, or 365. On the Custom Solution, we'll let you go anywhere from 0, 30, 60, 90, 180, or 365. Again, it's not that much more complicated. It's just we're giving you more options out there. So the built-in benefits, pretty much the same. When it gets down to the main benefits inside the product, you'll notice there's no difference between the two. What you decide on for the monthly benefit is going to be your nursing home benefit. Okay? So if I go sell a policy and I sell a $6,000 a month policy, it's going to pay $6,000 towards the nursing home. Now, assisted living, I can set it anywhere 50, 75, or 100%. So therefore, if I'm going to go short and fat, I can cut that assisted living, recognizing that they don't charge as much as nursing homes. Home health care, I can go 50, 75, or 100% also. So just 3 basic options. Adult daycare is 100% of your monthly benefit. Your stay-at-home benefits is up to 2 times the maximum monthly, just like the old product was. And that covers your caregiver training. Caregiver training is for when you live in rural areas. That's the biggest usage of it, is like out here in Minnesota where we got a lot of farms. If dad needs a shot and we have to send a nurse out every day to give that shot, that's going to wipe out their benefits pretty fast. So it's a lot better if we can train somebody to give that shot to dad, whether it be a next door neighbor, mom, the kids, anybody that can be trained to save them from utilizing their pool of money too fast. Durable medical equipment, that's the hospital bed, the wheelchair, the respirator, anything we need to keep mom and dad at home. You know, the whole key to our policy, you're going to notice, is it's geared to keep people at home. And to do that, we have to make sure we've got the right equipment there for them. Home modification, that's widening up the doorways, putting ramps in, making sure that we've got nothing to hinder dad or mom if they have to be in a wheelchair, to be moved around, to make sure that everything's easy for them. Medical alert system, that's the help me if fallen, can't get up button. You know, all of these are included in our stay-at-home benefits. Then you also have bed reservation for nursing home or assisted living up to 30 days per calendar year. Again, all the benefits are the same, regardless of whether you have the Secure Solution or the Custom Solution. Going farther, respite care is 1 month per calendar year. Respite care, for those of you that are new to long-term care, respite care is coverage just to give the caregiver a break. You know, if you've got mom taking care of dad at home and she's doing it day after day after day, you know what? Burnout happens. So basically what the policy says is for 1 month per calendar year, you know what? We'll hire somebody else to come in and take care of dad and give mom some relief here. Let her take a little break, a little vacation, a little time away, so she can get motivated to come back and do it. Hospice care, notice no maximum limit. It just pays the maximum monthly benefit. No elimination period on the hospice. Remember one thing, that Medicare normally covers hospice as a home health care benefit. So the reason that this benefit's put in the long-term care policy is to enable them to use the facility if they desire to out there. International benefits, common in the industry, 12 months. Okay, our policy waives premium the minute that they start collecting the actual benefits. So if they take the cash first benefit, boom, their premium's going to be waived from day one out there. Alternate care. Alternate care basically is a clause in a policy that says once the person reaches a point that they qualify for benefits, okay, the policy might pay for things that aren't normally included in the policy if that type of care is acceptable to the patient, to their doctor, and to the company. So what it does is it opens the door up to other methods of care that aren't typically covered under a long-term care policy if they're deemed that it's in the best interest of the client out there. Again, notice that all these benefits are similar with both products out there. Benefits that you don't see in the policy that used to be there in the Assured Solution Cash First is the 5-year rate guarantee and restoration of benefits. These are two benefits that we kind of saw the handwriting on the wall, that these weren't going to be able to be kept on in the future of long-term care as the industry is evolving and we're learning more about claims, etc. Okay, now the cash benefit. Always remember one thing. The cash benefit is what differentiates us from every other company out there. It's the fact that when your client buys a policy, if they buy the secure solution, the cash benefit's 30%. Custom solution, it's 40%. Day one, the minute they trigger the benefits of the policy, they can start collecting the cash benefit. The cash benefit, they don't have to submit any bills. They don't have to worry about who's taking care of mom or dad. You can have family or friends take care of them. And that's the key thing. When we look around the industry today, we realize that 86% of all long-term care in the United States is provided in the community. So think of that fact in your mind first. Then go a step farther and see that 78% of those being cared in the community rely exclusively on family and friends. Now, you know what that means? If you don't have a policy that's going to pay benefits when their family and friends are taking care of the patient, they're not collecting any benefits at all. You know, I always tell the story of when I first met Harry Crosby. Harry Crosby, if you don't know him, he has been a fabulous long-term care agent. He sold $500,000 of premium in 1995, first agent in the history of long-term care to reach that mark. He's written a book about long-term care. He's trained long-term care. He's gone through all management positions. When I first met Harry down in Florida, I was going down to train some agents, and Harry was the head trainer for them. And they kind of warned me about Harry, going, you know, one thing about Harry is he bleeds Genworth, okay? He loves Genworth. He's sold for him his entire career. He's not real sold on your cash first concept. So I kind of knew going in that this might be a tough nut to crack. So I met Harry. First of all, we got along famously. He's just a great guy. His knowledge in long-term care is unbelievable. So we sat down and we started talking long-term care, and we started talking about the cash first. We were about a half an hour into the discussion, and all of a sudden he looked at me, and he said, you know something? My dad had long-term care insurance. And when my dad needed care, we took him into the house with us. And you know what? He didn't file a claim under his policy for at least a year and a half after we started caring for him. And I looked at him, and I said, that's what cash first does. You know, that's the key to cash first, is that I can't believe the number of stories I've heard similar to what Harry told me, where agents, where clients have come up to tell me how they had had a person that needed care. They had a long-term care policy that they had paid premiums for years. And you know what? When it came time that they needed care, they didn't file a claim. And when I ask these people, the answer that comes back to me more than any other answer is they didn't want outsiders in the house. They didn't want outsiders involved. When the time comes that one of your loved ones is going to need care, you know what? Your family's going to band together. They're going to come together and they're going to talk about it. And guess what? They're not going to talk about where are we going to put mom or dad in the nursing home. What's the discussion going to be about? How can we keep mom and dad at home? How can we make this happen for them? And that's when cash first comes into play. You know what? When our policy is putting those dollars out there, and your client can stay in cash for as long as they want to, they can collect the cash under the policy, which is going to extend their policy benefits out. You know, if you buy a 2-year policy and you're getting 40% of it for the cash first, that all of a sudden turn that into a 5-year benefit out there. And that money can come in and help a family make it happen. Every time I've talked to people that have cared for people inside the home environment, I ask them the question, what difference would it make if you would have had an extra $500 or $1,000 a month coming in cash? And every time they go, wow, that would have meant a ton of difference. That would have helped us do it longer. And that's what cash does. That's what differentiates us from every other company. Always remember, that's the power of it. I tell people, if you don't care if you go into a nursing home or a facility, then go buy a catastrophic policy. Just buy a reimbursement policy. It'll do a great job for you. But if you want to stay home, there's no policy that can do it for you like Cash First. This is why agents sell our product out there. This is why agents go out there and say, I don't care what the other company's price is. We're not comparing price here. We're comparing what's going to happen to you at the time of the claim. So the first thing to key in on is our Cash First benefit. Next of all, our inflation options. I'm going to talk a little bit about inflation options today because you'll notice that in our new product, we've really expanded this out. And I'm going to tell you why. First of all, let me show you the difference between them. On the Secure Solution, you can sell 3, 4, or 5% compound, and you can sell the 3 or 5% on a 20-year compound. Okay, there's no buy-up protection offered under the Secure Solution. Under the Custom Solution, we're going to let you go anywhere from 1 to 5% in 0.25% increments out there. And we're going to allow you to do any one of those percentages either as lifetime, 20-year, 15-year, or 10-year. And I'll tell you what, today I'm going to go a little bit longer as I go into software, and I'll show you why some of that's important. But we're going to tell you anytime the client doesn't buy 5%, we're going to include the inflation protection buy-up option free of charge in the contract. And when we include that in the contract, what that allows is it allows your client to buy up at any time in the first 20 years or until age 75, buy up to any inflation option above them with no evidence of insurability. And they can utilize this feature as many times as they want to. So basically what the inflation buy-up option allows is your client to step into coverage. Here's the deal, and I'll again talk about this further, but when you look at the difference between 5% and 4%, at age 55, the difference is 26% of the premium. So if I'm out there quoting 5% and I drop down to 4%, I just cut that client's premium by 26%. If I drop it down to 3%, I cut it another 26%. So I can walk out there and cut that premium in half and offer the client 3% and then tell them anytime you want to, you can buy up to another option. You can buy up to that 5% if you desire, as long as you do it within the first 20 years or until you're 75. What tremendous premium flexibility, because a 1/4%, you know, is now all of a sudden equal to 6.5% premium. I'll tell you what, when you start playing around with our policy, you'll see how this allows you the ability to put that price point at exactly the point the client wants, so that they're going to step into this policy and they're going to keep the policy. So a tremendous option there. Okay, optional benefits. You'll notice that both policies have shared care. Shared care is the one that says, is the clause that says that if you use up all the benefits of your policy, you can access benefits from your partner's policy as long as you leave them 1 year there. The security benefit is unique to our policy. And this is a benefit that allows you to give coverage to an uninsurable spouse. Let's say you walk in the household and mom's taking care of dad and dad's got Alzheimer's. Okay, early stages, she's taking care of him fine. I can look at dad and say, Dad, here's the key. You know what? You got her, and I can't sell you her. But as long as she's healthy, she can take care of you, and you can remain at home. You know, here's the deal. Your problem's going to be if something happens to her. Because if something happens to her, now all of a sudden you guys are going to have to be paying for care for both her and him. Okay? With the spouse security benefit, I can add dad on the mom's policy. And what it says is if mom reaches the point she needs care, the policy will pay an additional 60% of the reimbursement benefit in cash each month that can be used to care for dad. I'll tell you what a tremendous benefit out there. You know what? This is probably one of the benefits that agents that are new to us sell right off the bat, because they've had people out there that they went out and wrote mom and dad an app, and all of a sudden dad got declined. And mom looked at him and said, well, if he's not good enough for your company, either am I. You know, that's one of your worst nightmares out there. Now with spouse security benefit, I can walk back into mom and dad and say, guess what? I got a company now that will offer him benefits. It's going to be based on you, mom. But the fact is that if you need care, now we've got coverage for dad too. It's a tremendous benefit. To the best of my knowledge, we're the only company in the entire industry that offers it. And I'll tell you what, agents love this benefit. Joint waiver premium available on Custom Solution, of course, waives the premium for both the spouses if either one of them need care. Survivorship is the benefit that says if mom or dad die after 10 years, premiums paid up for the other one. Professional home health care is the second strongest benefit we offer in our policy. This is an option available on Custom Solution that will say that we'll pay up to 200% of the monthly benefit for professional home health care. Now, a lot of agents say, well, yeah, but I mean, what good is that benefit? I'll tell you, that benefit, along with the waiver of home health care elimination period benefit, makes our policy incredibly strong. We know that all companies say that if you waive the home health care elimination period, it means we're going to pay home health care from day one. And almost every company says every day you have a home health care will apply against your overall elimination period. So a lot of agents sell 90-day elimination with a waiver of home health care. Now add the professional, and I'll tell you what you do. You give us the best odds chance of having your client never have to pay an elimination period in their life. With 200% professional home health care, if I sell mom and dad a $5,000 a month benefit, it gives me $10,000 for professional home health care. For $10,000, I can hire a nurse to come in and stay with you 24 hours a day, and I can make sure you stay home for that 90 days. I always tell agents, I don't care how long the professional home health care works, as long as it works for at least 90 days. Because as long as it works for 90 days, guess what? My client doesn't have to pay an elimination period. And when I get a client out there that doesn't have to pay an elimination period, and they go right through the progression of care without having any out-of-pocket, and they have a friend that all of a sudden gets stuck for $20,000, $30,000, $40,000 out of pocket when that elimination period hits, guess what? I'm going to be the hero. And you know what? That's what it's all about. We all want to be a hero when it comes right down to it. So in my mind, the professional home health care benefit is the second strongest differentiator we have in our policy. When I offer that to a client, I'm telling the client we're giving you the chance to avoid that big out-of-pocket expense when you actually need care. So a tremendous add-on to our policy. Return of premium, you'll notice that we offer 3 return of premiums now. Both policies have return of premium at death, less claims available. Okay, 3 times the initial maximum benefit. And I'll tell you what, that is the new rider that we came out with. This is a rider that we had on our policy way back when, and agents loved it, and they've been pushing for it because it's kind of like a final expense rider onto a long-term care policy. So both policies you can buy that on, and then you'll notice on Custom Solutions, we allow the normal return of premium at death less claims, and the return of premium at death less claims prior to age 65. Both the return of premium at death 3 times and the prior to age 65 are very low-cost riders, and they're nice add-on riders that people like. So remember those when it comes down to quoting the policy, and remember to show up to people, because you'd be amazed at how many people will jump all over those. Okay, you know what? That's pretty much it for our policy. As you can see, it's a pretty easy policy. It's just got a lot of flexibility in it. And again, I'll go into the software and quick show you a few things on it. As far as underwriting goes, we are going to do a pharmaceutical check now and medical records on all applicants. Okay, we're issuing from age 30 to 79 years old. We didn't do a lot of other changes in the underwriting area at all. The bottom line is that actually some of the changes we made were positive changes. It used to be that to get the preferred discount, you couldn't smoke at all. Okay, and that kind of hurt people that maybe had a cigar once in a while in celebration. So with our new underwriting, your client can smoke up to 1 cigar per month and still qualify for preferred rates. Exercise-induced asthma was another one that kicked people out. Now we allow that. Okay, so we've done some positive changes to our underwriting. Don't worry, we're not going to go with the blood work or pee in a cup or anything. That's not in our game plan for the future, that we know of at least. And Mutual's kind of indicated that they won't be moving in that direction. So basically, we tighten up a little bit by going with medical records on everybody. But other than that, our underwriting's pretty much staying the same. Premium allowances, if you have both partners insured, it's a 30% discount. If one of them get issued, 15. Our preferred discount is 15%. We added a new discount with the common employer. Common employer, since we're not in worksite anymore, the common employer discount says if you can get 5 employees from the same employer to apply at the same time, you fill out a sheet for the common employer discount, and it will give a 5% discount to all of the 5 employees. And then any other future employee you write with that company will get the 5% discount. So that's a real cool discount that we added now. And I'll tell you what, a lot of agents are taking advantage of it right now. Okay, let's talk about inflation a little more just to key in on this. The 3 key changes we made to inflation was the lower inflation points, lower increments, and capped options. The benefit of that to you is, remember, at age 55, 1 point difference in the inflation is 26% difference in premium. So right now what we're seeing is a lot of agents that all of a sudden just quit selling inflation out there. In fact, industry-wide right now, 18% of sales out there are either future purchase option or no inflation at all. So we didn't want to see that, okay? A lot of states with their partnership are moving to 1% inflation now, and we wanted to make sure we give the agents the ability to do that. So we put the guaranteed upgrade option in there and then said, here's the deal, okay? You can go all the way down to 1% if you want, and you can increase that by 0.25% increments out there, okay? The 0.25% increments is big for the actual premium because you're looking at 6.5% difference in the premium for each quarter point. So that means that all of a sudden you can start cutting premiums a lot. You know, you look at an average couple sale right now at $4,600, 6.5% discount is $299 a year. You know, if I go 0.5% difference, I'm saving them $600 a year in premium. That's a lot when you think about it. And then we offered the capped options. Any one of the inflation can go with 10-year, 15, 20-year, or lifetime. And remember again, you've got the guaranteed upgrade option or the buy-up feature on every single policy that's less than 5%. So the power of the inflation buy-up is, let's take a look at a $4,500 monthly benefit, and I've just up here is what I base the policy on. Now, if I go up to 3% to a 60-year-old couple, I'm looking at $5,800 premium. If I drop that to 2%, I drop that down to $4,774. All of a sudden, that might be a lot more feasible. And a lot of states now allow people to buy up to inflation or the partnership protection. So if they start out with the lower amount, they can jump up to that level. Let's take a look at the software and just kind of show you some of the stuff. The beautiful part about our software is you'll notice it is the easiest to use software there is in the entire industry out there. All you have to do is set your state. I'm going to go to Nebraska here, okay? And then decide if I want the custom or the secure solution. You can see that we have different color schemes to remind you which one you're in. I'm going to go with the custom. And let's look at a partners, both insured, okay? Mom and dad, male, female, 60 years old. I'm always going to rate them select, okay? Now, when I come down here, this is where I'm going to start designing my plan for the couple. Now, if I want, I can use my Pick Max button here. If I use the Pick Max button, notice the window that opens up on the screen? Over here, it tells me what I'm quoting each person. I'm quoting a $100,000 policy, $1,200 a month cash, $3,000 monthly benefit. Okay, it's about a 3-year plan if I use the $3,000. If I use cash first, it's at 6.94, and my couple's premium is $2,493. Now, I can grab this blue thing, and let's say I want to go up to $170,000 of coverage, and I want to get my benefit up to about $4,500 a month. All I have to do is move my blue button, and you can see over here, it automatically moves everything with me. So if I want to go to a $170,000 policy, $4,500 a month monthly benefit, that gives me an $1,800 cash benefit. I got a 3-year plan with $4,500, or I've got 8 years if I use my cash first. Premium, $4,021. When I get it set to where I want, I just push the OK, and you notice it goes back to the screen and everything's set. The beautiful thing about our software is every time you make a change, it automatically shows you the premium. So you notice my premium down there is at $4,021. If I want to add the home health care waiver of elimination period, I check the box, boom, automatically shows me exactly what happens to the premium. Okay, anything that I want to do, all I got to do is check that button, and it's going to show me what's going to happen to the premium. If I drop it back off, it shows it. Now, let's take a look at inflation. First of all, let's set this inflation up to 5%. And the first thing you're going to see is there's a reason a lot of agents aren't selling 5% anymore. The difference between 3% and 5% is unbelievably big. So just by taking my inflation and dropping it down to 3%, okay, look at the discount I've given to the client. Now, if I click the Pick Inflation, this is going to open up a window that's going to tell me what my premiums are going to be if I switch to something. Anything that's in green is going to be partnership protected. So you notice if I wanted to, I could go at 3% and I could go a 20-year cap, okay? And boom, I just took my premium and dropped it down to $3,900. All I did was go with 3% with the 20-year instead of 3% lifetime, okay? Open this back up. Okay, if I'm looking at, by the way, I want to just show you something different here. If I had a 61-year-old couple, well, so all I did was change their ages to 61. Now you notice I could actually go down to a 15-year cap if I wanted and still remain partnership protected. So the cool part about this screen right here is this really allows you to show you how you can maneuver the inflation. Notice I could go all the way down here to 1%, okay, and I'm still partnership protected. I could go 1% with 15 years, and at 61 years old, I could walk in there with the premium of $2,800 if I wanted to, and tell the client, you still have partnership protection. You have the guaranteed buy-up option. So you can buy up to any increased inflation option you want, all the way up to 5% at any point you desire. Okay, this is really cool. And the fun part about this is it won't let you make a mistake. Let's say you accidentally want to drop to a 10-year to see what it does. Notice what happens on the software is it automatically yellows out. and go down to the bottom. It says the selected inflation is not partnership qualified for this age. Now, if I still wanted to sell it, I can uncheck the partnership, and I could still sell them that policy. But if I want partnership, I'm going to have to set that back up to somewhere that I'm not going to see the yellow all over the screen. So with our software, it allows you to really play and look at that pricing point to make sure you're hitting exactly the price point you want to with the client. Because the fun part about this is it allows you real quickly to see, what if I did go from 5%, okay, I'm at 5% 15-year here. You know what? That premium is a little bit high, okay? If I took that and backed it down to 4%, look at the difference in premium that I got. And I'll tell you what, 4% at 15 years, that's still pretty strong inflation. What happens if I go to 20 years? I'm up to $4,900. Now I might want to take a look at this and say, well, what if I back down to 3%? Okay, 4,081. It's 4,000 is where I think my price point is with this client. Now you can see I'm keying right into the price point they want. And I'm still giving them partnership protection. I'm still making this easy for them. So our software is incredibly strong because all you have to do is click the button. If I want to see what joint waiver of premium is going to add to the policy, I can see, okay, I'm looking at about $80 more a year. Okay? Well, that might be something they like. Let's take a look at the 3 times return of premium. You know what? I'm looking at a couple $100 a year. You know, that might be something that's very easy for them to say, I like that. Okay? Let me get back to my right screen here. Okay. All in all, we think that Custom Solution is the long-term care insurance solution for the future. Again, it's got first-day cash benefits, no restrictions. That's the differentiator that stands out above everything else. By the way, in the first-day cash benefits, remember when I told you that you can collect this for as long as you want. You can also move back and forth. If you're taking the cash benefit and all of a sudden 1 month you end up needing a lot of home health care, you can switch to the reimbursement side, collect home health care, and then if you don't have the high need for home health care again, you can turn around and switch back to the cash benefit. So you can move back and forth as many times as you desire. The second most powerful part of our policy is when you combine the waiver of home health care with the 200% professional home health care. We give your client the best odds chance of any policy in the industry to avoid having to pay an elimination period at claim time. Now, I'll tell you what, you might not think that's big now, but when all of a sudden you got clients that are dishing out $20,000, $30,000, $40,000 in costs during that elimination period, your clients that aren't having to pay anything are going to figure that you're a hero. And I'll guarantee you, you're going to hear some complaining from the clients that have to pay it. So that's a real powerful feature. We fought hard to keep that 200% professional home health care just for that ability, for the ability to make sure we give your client that best odds chance. The third thing we offer you is inflation option flexibility and the buy-up option, which allows you to fine-tune your recommendation, counter affordability issues, and help more people. You know what? The key to our product is the combination of these 3 factors out there and how they make this, in our opinion, the strongest product in the entire industry today. As you are out there selling today, one of the big things that you're all seeing, as everybody in the industry is that declines are going up. Companies know they can cherry pick today, and they are definitely cherry picking. So today, you can't afford to walk by your decline clients out there. Today, you need a solution for them, and we have a solution for you, and that solution is critical care. You know, agents are struggling a little bit to get their arms around this, but once they do, they're finding out that this is an incredibly good alternative to long-term care. Based on a critical illness chassis, this policy, dollar for dollar, will pay over 70% of the exact same claim dollars a long-term care insurance policy will pay. Now, when you got a policy that pays 70% of the same claims dollars, the bottom line is that covers all the major risks for your clients. On top of that, it's going to pay claims long-term care insurance won't pay. Typically, when we see a cancer patient, a lot of times they won't trigger benefits under a long-term care policy because of the fact that they can still perform the activities of daily living. Okay, with critical care, it's based on diagnosis. It'll start paying day one based on that diagnosis. Another two claims that you often see long-term care not reacting to is heart attacks and bypass surgery. Typically, they won't trigger the 90-day pre-cert. With our new policy, again, it pays on diagnosis, and it pays those claims 100%. So it's going to pay a lot of claims that a long-term care policy won't pay. You know, if you don't have any risk factor at all, your risk of having a heart attack or bypass surgery in your lifetime is 33%. If you have one risk, okay, you have high blood pressure, you smoke, you drink more than 2 drinks a day, okay, you have one risk factor out there, and your odds of having a heart attack or bypass surgery jumps up to 47%. Now, when your odds of getting cancer is 1 in 2, your odds of having a heart attack or stroke, heart attack with one risk factor is 47%. If you live to age 85, you got a 50-50 chance you're going to get Alzheimer's. That pretty much takes away the argument, what if I never use this policy? That's the cool part about critical care, is it's a policy that your clients are going to use. But more than anything, it's going to give them coverage. You can argue all you want the differences between critical care and long-term care insurance. It's irrelevant if the client can't get long-term care insurance. With critical care, we're issuing over 95% of the declined long-term care insurance clients that are being submitted. There's no APS, there's no height and weight. It's 5 easy health questions. And I'll tell you what, if you're in long-term care insurance today, you can't afford not to offer critical care. So pick up the phone if you don't have a contract with critical care. Call into GoldenCare today and get a contract and get some training in this product so that you can go out there and start utilizing it. And if you're an independent broker, take a look at our A2 program. We have a great marketing opportunity here. It's a sideline opportunity. All you have to do is be able to sell at least 2 married couples a year, and you can make some great extra money inside of A2. So take a look at our A2 program and see if it's an opportunity for you out there. Okay, I'm going to open it up for questions, but before I do, I want to thank each and every one of you very much for attending here today. I do appreciate it. Our phone number is at the top of the page there. Check out our GoldenCare agent site, our goldencare.com/software to download your software, and our A2 agent site to learn more about our new marketing opportunity. Okay, again, I want to thank you all for coming on. At this time, I'm going to open it up for questions.
The conference is now in talk mode.
Okay, anybody have any questions about the Custom Solutions product?
Mark.
Yes.
Thanks so much.
Hi there, Nate. How you doing?
Revised consumer marketing PowerPoint presentation available yet? Or is it?
Yes, it is. The new 2014 consumer presentation, it will be sent out to everybody that attends this session today, and it's available on our LTC Agent Sales Tool site. Thanks for asking, Nate. Any other questions about the product?
Yes, Mark.
Yes.
This is Randy here in Ohio.
Hi, Randy. How you doing?
I'm doing okay. Yeah, I just sold a Custom Solutions last evening.
You did, huh? Congratulations.
Sure. And one thing that I forgot about was that inflation thing for partnership. I for some reason, I learned something today. I wasn't aware that the states would accept anything less than 3% compound with that product.
Now, Randy, in your state,
Yeah.
I think Ohio does require 3%.
Okay, then I needed to know that. I wasn't sure because so that's a state-by-state requirement then.
Yes. Yep. Let me go to the software here, and I'm going to set it for Ohio.
Okay.
Yep. Notice Ohio, you've got to have lifetime 3%.
Oh, very good. Very good. I'm glad you told me that. Okay. Well, that makes sense then.
Yep.
Thanks.
Yep. Thank you for getting on today, Randy. I appreciate it.
You're welcome, Mark.
Any other questions about the product? Then I want to thank you all again for coming on. I appreciate it. I hope you all have a great day and a great 2014. Goodbye, everybody.
Who do we talk to about the A2?
A2, you can just go to the A2 agent site or call in and talk to your regional manager.
Okay, thank you.
Thank you. Bye, everybody.